Good morning. Good morning.
Morning.
Scott, I just got off the phone with Tim Barfried, and he didn't have a lot of advice he could offer, unfortunately, because he doesn't know how that lender's processes work or whatever. But what he did say was that he can check with his people and see what a potential turn time might be from him, and then you could present it to them like, "Hey, I have a lender locally who is saying he's able to do it in X number of days, and even though it's probably still going to delay their closing." He said he doesn't think it would delay it any more than like a week.
Okay.
So, yeah, I'll let you. I mean, you can float it by them and see if they have any thoughts. And in the meantime, he'll let me know what his people say about what his turn time would be.
All right, perfect. And when we're done, can you stay on there so we can answer a few of the questions I didn't get to yesterday?
Of course. Yeah.
Thanks.
Morning, Lee.
Good morning. Have you heard anything from Nick and Diana this morning?
I knew you were going to ask. It's like we read each other's minds.
Mm-hmm.
I've already called the homeowners association twice. Keeps getting sent a voicemail. I haven't heard from them yet, but I was just going to send them a message that I'm trying to get in touch with the HOA. And then once I get in touch with them, we'll figure it out how to switch everything in their name. I just don't understand.
I love that. That's amazing.
And is there like a different way to look up the exact homeowners association for their property?
You can ask the listing agent, but aside from that, I usually go by what's in the MLS.
Okay. Because I just did it by like when I was searching their property, the homeowners association that came like that was inside of their complex popped up.
Mm-hmm.
So I used it that way. And then I clicked on like the website and then looked at it through there. So
yeah.
Cool.
Sounds perfect. Good morning, everybody just joining.
Good morning.
Having technical difficulties. And oh, she's driving.
She's always driving somewhere.
She's on the move.
That's what happens when you have. That's what happens when you have 3 kids.
I was thinking kids. Yeah, you're the bus,
Well,
right?
And the 3 of them goes in different times.
Are you serious?
Yeah.
How old are they?
So I have one in high school, senior, 17, and she goes at 7:15, so she has to leave like at 6:30. And then the other one goes in at 7:50. She's in 5th grade, and the other one's at 9 o'clock, and she's in 8th grade.
All girls.
All girls. I know, crazy.
My
Her
friend
husband
and I-
is
yeah.
I have 3 girls as well.
Oh, you have all
Isn't it
girls
fun?
too?
3 girls.
Oh my. I
Yeah,
don't have any kids.
a lot of weddings that we're in charge.
Oh. Gotcha.
love it. All right. Well, it is just a little after 9 o'clock, and I want to respect everybody's time, so we will kick this off. Good morning, everyone, and for our guests joining, my name is Lee. I'm the operations manager for Ben Lobby Homes. So Ben is on the road this morning for an appointment, so he wasn't able to join, but here we are. So we will do this. So for the team members and for the others joining the call this morning, we are going to kick it off first with our guests because, again, I want to respect their time. So we're joined this morning by Michael Wallman. He's a financial planner at Wallman Financial, and Rose Gamba, who is a CPA. And we thought it was a good opportunity as we approach the end of 2021 and we start to think about income taxes, that we have them come on and talk about tax and financial planning for real estate agents. A lot of us came into real estate after being an employee where kind of part of that is taken care of for you. So it's a little bit different when you go into a situation where you are an independent contractor. And yeah, so we thought that their expertise would be quite beneficial in this arena. So Michael or Rose, do either of you or both of you need screen sharing privileges? If you do, I'll be happy to grant them to you.
Michael, why?
At this time, I do not have the slides this morning.
Okay.
I had some technical difficulties.
Okay.
But I will go over what I have with Rose. And yes, what you had said is correct. What we're doing is going to talk a little bit about taxes and planning and saving for retirement. And Rose and I had talked prior to this meeting, and I introduced her to something called the solo 401k and how that can help with your taxes by reducing your income through deductions, thus reducing your taxable liability. Rose, did you, when we talked, you specifically looked at the Roth component, and I'm going to circle back to the solo, but would you like to just mention about how important a Roth is?
Okay. The biggest question I get is, do I have to keep paying taxes when I'm not working? And I tell people, Lee is laughing. You've probably heard that. It's like, do I have to pay for this real estate? Yes, you do. Do you have to pay for this mortgage? And yes, as long as you're earning money, you have to pay taxes. So I recommend to people is, I personally have done it, move all your stuff to Roth. So when you start taking it out of Roth, pay the taxes now while you're working and, you're making money and stuff like that. And so when you become a senior and you're getting that Social Security, if you take it out of the Roth, it's not taxable. So say you get $2,000 a month in Social Security, $24,000, you take $2,000 a month in your Roth, you have $48,000 that's not taxable. So I'm exclusively Roth at this point in my life. I'm close to Social Security, but I'm not quite there. So it's like I have moved everything to Roth, and you can still move stuff to Roth if you have it in 401ks or IRAs, just traditional IRAs. Just keep moving little pieces to Roth and just pay the taxes each year. And so when you're ready to take it out, why not pay the taxes now, and then later when you're retiring and traveling all over the world, don't worry about taxes. You don't even have to file them.
Rose, do you know what taxes will be in 2040?
No.
That is why we want to pay our Roth today, pay taxes today, and while you're working. That was a very good point. What I'm going to talk about right now is what's called the solo 401k. It's for owner-onlys, no employees, plus a spouse. And I'm going to circle back to the spouse in a little bit. As a financial planner, I work in a holistic method. So I talk with accountants closely, like Rose. And together we work with other professionals, if needed, to come up with some kind of plan, taxes, and retirement savings. So the solo 401k is just like a 401k as if you were at a corporate environment. So you at Disney, for example, you're an employee and Mr. Disney is the employer. The solo 401k, you are both the employee and the employer. So what we do basically with the solo 401k, because the contribution limits are so high, the contribution limits on the solo 401k, as you can see here. Are you able to see these slides?
Yes.
I actually just shared on your behalf, Michael.
Oh, thank you. So I guess I did do it. So basically, the solo 401k is for individual business owners, no employees. As the employee, because you're both the employee and the employer, you'll see on the slide, as the employee, you're able to contribute $19,500 plus, if you're over age 50, another $6,500. As the employer, Mr. Disney does a 6% match, but because you're an awesome boss and employer, you're going to match up to 25%. This is an example of somebody who made $154,000. As you can see, the total contribution on income of 154 is 64.5 if you're over 50 and 58 if you're under 50 years old. So as you can see, 154, you're able to reduce the income if all of it, and we're going to talk a little bit about what you're able to do as the employee. But in this example, you make 154, you contribute the maximum, okay? And what do you see? You're saving close to 40 some odd percent. Rose, you want to speak a little bit about the tax savings here, and then I'm going to talk a little bit about, as the employee, where you can direct your contributions. So theoretically, on the next slide, I'll show it, where you're able to contribute $26,000 to a Roth. There's no other vehicle where we can contribute such an amount. Rose, you want to talk about the Roth and what we're able to do here?
I'm not sure what you want me to talk about.
In this example, what we're looking
You
at
can
here,
keep talking.
what you're looking at here are the plans that you might currently see out there. You might have seen simples, you might have seen SEP IRAs, and we're talking about a solo. As the employee, you can see you can contribute the 19.5 plus the catch-up of 65. Now that's the 26 that we saw in the earlier slide. All of that, as the employee, can be directed to a Roth. So inside of the solo 401k, there is a sleeve where that can be directed into a Roth. Now, that will not, now Roth, the Roth component of this, Rose, will this save them taxes today?
I'm muted. No, it
And-
won't save you taxes today, but it will in the future.
And
Yeah.
what we're saying, Rose, is to perhaps pay the tax today because we know what the number is.
Yes.
So in this example, this one is someone who makes 100,000. Okay. So this person is able to contribute the $26,000 plus 25% of the W-2, which is 100,000, which equals $25,000. So we can contribute 51,000, reduce our income. We can do that. And down the road, as this money grows tax deferred, when we pull it out at age 72, when you're forced, you're able to take it out prior at 59.5. But if you continue to let it grow inside of a traditional 401k up at age 72, Uncle Sam will come knocking. He will come knocking in the form of an RMD. He's going to require you to take a minimum distribution. Rose talked about something earlier. If your RMD is significant, plus your income from Social Security. Rose, what would the taxes be on up to, what percent can Social Security be taxed if one's RMDs are great?
Believe it or not, everyone, they tax up to 85% of your Social Security. Can you imagine somebody living on $30,000 a year having to pay? It's like, it's the other thing. Okay, this is going to be a personal opinion. They tax unemployment too. It's like, wait, they're unemployed and they're on Social Security and you're taxing them. So the goal is to keep it under, like if you're single, you can pull out up to 25,000 so that Social Security is not taxable. And if you're married filing joint, it's like 32,000. So you want to mostly get Roth distributions, and if you have to, throw in a little bit of 401k, but keep it under those numbers. If that makes any sense.
This is wonderful, Rose, because this is where the relationship between a planner. So if your financial planner currently is not working closely with Rose or a Rose, okay, that's the conversation we have. Hey, Rose, I see we made 100 grand in this example. I think we can put in that $51,000 to reduce income. And Rose would say, you know, both of us are big proponents of the Roth, Michael.
Yes.
Why don't we talk to the client about putting some more money in the Roth? Well, what's going to happen is their tax liability will go up, right? Yes. So yes. So what we'll do is we're going to talk to the client and say, what's a palatable number, right? What's a palatable number that you're comfortable paying tax? We both want you to contribute that maximum 26. Okay. So that would leave you with a deductible amount of 25. Well, if you had a deductible amount of say 28,000, that might help you a little bit. Well, we don't have to put in all 26. So the conversation with Rose, the client, myself, is what is your, what comfort level are you to pay tax today? Okay, because down the road, we do not know what taxes will be. So again, the solo 401k has a Roth component, just like other 401k plans. You're able to contribute both as the employee and the employer with that maximum we had earlier. The second component of the solo 401k that we particularly see out there that is not available with a SEP or a simple, and that is the ability to pull money out, okay? The solo 401k allows you to contribute, and it allows you to remove the funds up to $50,000 without the tax and without the penalty. Rose, what is a penalty if somebody was to take out money out of an IRA?
If they're under 59.5, it's 10% plus the income tax. So it depends on their other income and stuff. They could lose as much as like 30%.
So that is why we talk about this is the ability to remove funds without that 10% penalty and without income. How is that possible? It is a loan. You are paying yourself back plus interest. This is a 5-year fixed loan paying yourself back plus interest. It's not a loan from a bank where you pay interest, but Mr. Bank of America received that interest. Here, you're pulling money out of your solo 401k up to $50,000. That $50,000 can be used to relieve high interest credit card debt, high interest student loan debt. It is available to invest in real estate. So my clients that are realtors, what they like to do is they fill up the solo, whether it be Roth or reduce my income part. They load that up and then they turn around and pull money out. They invest in property. They pay themselves back monthly, principal plus interest. So that is a 5-year fixed. Now, if that $50,000 is used to purchase a primary residence, it now becomes a 10-year fixed rate, paying yourself back. You are able to borrow once every year. So if you take out 50,000, 1 month later, you put it back, you flip the property, you put the money back. You are not able to remove another 50 until the clock turns around to 1 year, 12 months, 1 day. And you can do it again. So again, the solo 401k has the high contribution limit. It has the Roth component, which is just an incredible vehicle, and the ability to remove funds without the tax and without the penalty through a loan. You're paying yourself back plus interest. Rose, is there any comments you wish to add regarding the solo at this time, and maybe talk a little bit more about the tax ramifications of not adding, and perhaps when we talk, and this is something I do with accountants, is I say, okay, what is the tax liability if they contribute 0? And Rose will come back and will say, this is a number and it's quite large. And she gets to deliver that news. I will advise the client, we have news. It's very exciting news. If you contribute,
All right.
if you contribute 0, this is the number we came up with. Rose came up with this great number. And then I would say, Rose, why don't you run it showing we put all 50 or 64.5 into? And Rose will compute that number and say, woof, that's not bad at all. And we would go to the client and say, oh, Rose has good news. And then Rose will explain to the gentleman, oh, your tax liability is X if we contribute all into the solo to defer my income. And then a third time, and Rose is like, oh my God, a third scenario. Well, we're big proponents of the Roth. So I'd like you to run it just as he only does employer contributions. And then those are the 3 scenarios that we would use. And then Rose would deliver those wonderful numbers. Right, Rose?
Oh, it depends. Most people don't like numbers. Actually, they don't like math. Sometimes I don't like math, I have to be honest. So the whole idea is, Kelly and everybody, you decide if you want to pay the taxes now or later. Because you know what's going, my theory in life, you know what's going on now. You have no idea what Congress is going to come up with later. So I just did for just, everybody misunderstands brackets, the tax brackets. Oh my God, I've gone into another tax bracket. So like, what does that really mean? So I just did, this morning, I just did a little example. Say a single person makes $50,000. How the tax brackets work, they go in little buckets. So the first bucket is $9,950. They only pay 10%. So on that, they pay $995. Then the next bucket, it's literally buckets, but everybody thinks they're in, like, say if you made $50,000, your tax bracket is 22%, but you're not paying 22%. You're paying in little pieces. I had a presentation and I could not find it, and I apologize. If you want me to come back and send it, I will send it to you as soon as I find it. I'm like everyone else. I changed computers and where the heck did it go? So I will send you that, or you can look at the brackets. The next bracket just for a single person is $9,951 to $40,525. So you subtract, like, that whole bracket is worth, it is so wacky. I use a computer program just in case you guys are wondering, because I don't sit here and spend all this time calculating all this stuff. not that smart. The next bracket is 12%. So the next $30,574 is at 12%. So that's like $3,669. And then you subtract those things, and the last 9,400 and some change is at 22%. So the total taxes for 50,000, bottom line 50,000 is 6,700, almost 6,750. But when you divide this is how you figure out your actual tax rate. You divide the 6,750 by 50,000, you only come up with 13%. So you're only paying on that little piece that you're over in that bracket. So I also figured just 50,000 just for grins on a married filing joint couple, maybe, a senior couple, whatever. They're only going to pay $5,600 in taxes, which is only an effective rate of 11%. So you have to just look at, in the brackets, you just have to look at, he can probably pull one up, look at the differences. That's when you hit the next bracket. For single, the next bracket would be over 86,375. The last bracket is 24%. So I just want people just basically understand brackets. Like, all the people freak out, oh my God, it's going to put me in the next tax bracket. Not really, unless you're making over $87,000. So if anybody has any questions, he can give you my email, and you could just email me a question or anything. So
that's when we talk about the brackets and then the incremental inside,
right.
Very few people are aware. Here's a great example. If somebody makes $100,000, and we want to bring them to that 86 because we could save them. So in one of these examples, instead of saying, we're big Roth, instead of 26 in that one given year, maybe we add money to reduce the income. Okay, right. That's another example of working with accountants and so forth. I wanted to bring up one example. Can you bring back the last slide?
Yep, give me just a moment.
I talked about a moment ago, owner only, no employees, plus a spouse. So when the slide comes up, I'm going to show a married couple. This is an example of a client that I have in Kissimmee. Okay. I'll go over the scenario, and hopefully the slides will pull up. Basically, what we have here is the next slide. I love it, to Roth or not to Roth, but the slide prior.
Give me just a moment here.
This is an example, or will be an example, of a couple I have in Kissimmee.
Is this the slide you're talking about?
Yes.
Okay.
This is a husband-wife, okay, and they work in real estate, okay. Mary, what she does is buys and sells real estate, makes very high commission, has done exceptional over the years, and what she has done is hired her husband to be a collector of rent, answer phones, and do maintenance, and pays him $40,000. This is a great example of where John, he could put away quite a bit of money. Okay, if you look there, you'll see he's able to put away that total amount of $36,000. But we're going to have him put money into the Roth. Okay, so he's going to put 26 into the Roth and 10 to reduce income. And then obviously we would ask Mary to try to do the same. That's an example of, again, owner only, no employee plus a spouse. Okay, this is a way to put a lot of money away in Roth as a couple. I would certainly look at this if that is the case. I do not have any other time or that you would like to ask any questions.
Right.
I do want to respect the time that everybody has. Obviously, both Rose and I, myself, I do a 30-minute consultation free, just to go over what you might have or might need to get you at least pointed in the right direction. Rose, are you inclined to entertain a call from some of these folks?
Yeah. Call, text, email. If you call and I don't recognize the number, you might just have to leave a message because my car warranty keeps expiring and I just want to make sure that I get that call. I'm being a smart ass. It's just like, oh, look, Kelly's nodding her head. It's like, how many times have you all gotten those calls? It's like, oh my God, stop. So yeah, just whatever you need. I've taught online. I like to teach. I like to help. I'm my motto, my personal motto. I could show you my little cards. I send them out as little thank you cards. You know, it's my logo, but on the back, can you read it?
Oh.
I can't save the world, but I can help the world save. So, and you could say on taxes, on whatever you want. So that's my personal motto. Thank you.
Excellent. What questions do you all have for Michael and or Rose?
I'll go. I always go. Is the solo something new? I'd never heard of it before, but then I haven't been in business for myself in quite a long time until now. So is that a new product, Solo 401?
So the solo 401k, just so you know, can be done anywhere. Vanguard, Fidelity, any other brokerage firm, those two particularly do not offer, their 401ks do not offer the loan component. They don't want to do the record keeping and the bookkeeping. To your question to answer, in 2010 is when the solo 401k came up to the top of the retirement vehicles, okay? Before there was the SEP. The SEP IRA was for individuals. They could put up to 25%, but the SEP does not allow Roth contributions nor a loan. In 2010, they came up with some verbiage that allowed the Roth component. Once they allowed the Roth component, and then they realized that, hey, we can put all $26,000 of my as employee contributions. That is when everybody got into the game.
I had never heard of it before the other day. So I'm behind the 8 ball with that. I have a Roth and a SEP myself.
Roth had Rose, had you known about this solo years ago, I would imagine you probably would have.
Oh yeah.
Because we didn't even talk about it. What are the limits on the little Roth IRAs and the traditionals?
I think I could put in like 7,000 a year. I'm over 50. Even though I don't look like it, I colored my hair, so it's good. It's all good. But I can put in like 7,000.
So
and then in my SEP, I put in like 500 a month.
So imagine putting 26 or 10 or 15.
I'd be retired now. I'd be just talking to you guys just for fun, and I'm doing that anyway. But you know. Oh, you don't know. I have a personality for an account that kind of scares some people. So just warning you, Lee. It's like, ah. Yeah, oh God. I would have been sucking money away like a little squirrel. I do have a squirrel mug. Okay, I'll stop now.
Well, I find you very entertaining.
All right, since you find me entertaining, I will play my last card for you. Somebody got me this when I passed the exam. When I first passed the exam, I was 27. So excited. I see this little card. I'm like, oh my God. And then I read it, and I've kept it for like 30 years. It's like on the back, it says, I'm allowed to annoy, drive crazy. I'm a certified pain in the ass. So, yeah. Okay,
I love it. Any other
I get all
questions?
excited when I get to talk to people, and if they have any questions, and help them out. I'm like
It's all
that.
good. I appreciate it.
I'm like that normally, so this is not an act.
Any other questions for Michael and or Rose while they are here with us? All right. Well, thank you both so much for taking a portion of your day to come and share information. If one of you or both of you would, I may have it, but just in case, if you would send me your contact information, I'll be happy to pass it along to the rest of the team so that everybody has it.
Sure.
And thank you for being open to team members reaching out to you with questions or whatever. I certainly appreciate that, as I know they do as well. And yeah, I guess that's kind of it for today.
Thank you. Thank you very much.
Of course. Thank you.
Thank you.
Both.
Bye,
Bye.
kids.
Have a wonderful day.
Thank you.
All right. That was certainly entertaining. I enjoyed that. So how are y'all today? Good. Bad,
Here.
ugly? Okay. All right. Angelica's happy. Happy birthday, Angelica.
Yes, happy birthday.
Thank you.
And by
That
the
was
way,
so fun last night.
I was just gonna
Discovered
say,
talent.
yeah, in case you don't know, Angelica can sing.
Mm-hmm.
Just saying.
Honey.
All right.
And Nick plays the piano.
Do you? Did you?
You
Yeah.
missed that, Lee?
Yeah.
Oh my God, you missed that.
Yeah, I left at like 8:30.
Oh,
Yeah, he was playing the piano.
Nice. All right. So we need to wrap this up here. So just really quickly, one of the things we talked about on Monday that I promised you I would do is update you on the progress toward our goals for October. So I wanted to wait until after the weekend business had been taken care of so I could give you a better idea. And I have those numbers courtesy of Ben this morning. So I will, if I can get my stuff together here, which is not always easy, I will share with you where we are. Can you see? Look, I got an updated graphic. and
Wow.
everything. You should be happy about this. All right. So for October 2021, so far, we have 12 homes under contract, which puts us just about halfway up. And fortunately, we're just over halfway through the month. So we've still got plenty of time to get to that, that goal of 25. Also, for in terms of the sales volume, we're just about halfway as well. Currently at almost 3.6 million for the month, and we have a goal of 7.5. So yeah, we're just shy of halfway on that as well. So right now we're trending pretty darn close to where we should be. So that's good. Be happy.
Yay.
That's awesome.
Yeah, you guys are killing it as always. I love it.
Do we know what our yearly gross is?
No,
Oh,
Nick, stop
really?
asking questions like that. The numbers exist, and toward the end of the year is when we're planning to talk about year overall.
Okay.
So for now, you
We're
just
at
keep.
like 31 million pending or closed last time at in-person work session.
Mhm.
Yeah,
It was either 31 or like 33. That's exciting.
I think Ben.
it is
I
exciting.
think Ben will update us next time he updates all the deals.
Yeah, I'm sure we will.
Yeah,
Great.
because that's very motivational, Nick. Right?
It is, isn't it, Mirars?
It is. It is.
Yes.
I'm watching you.
You both are ridiculous, aren't you?
We are.
All right. All right. I do have to run. I have another appointment that backs right up to this. So I'm going to let you all go and get about your day. Go out and be crazy producers. And if you need anything, please reach out. Ben is at appointments most of the day, so he may not be accessible 100% of the time, but I'm always here for you. So feel free to reach out if you need me. Yeah, that's it. Go and enjoy your day.